Ladies and gentlemen, it is a rare day when I will say good morning as opposed to good evening. This is Christopher Aaron. We are up late tonight, so it will be on Thursday morning, July 13th. By the time you tune into this, most likely, I do thank you for taking the opportunity to watch this video tonight. There is an important data point that was gathered over the last week relating to silver's flash crash. We're going to look at that. Now, that was a scary night on Thursday night into Friday morning a week ago, but that type of price data gives us very important information for the future. So if you're someone who's looking at this from a multi-year time perspective and you want to be making some trades or some investments going forward, pay attention to what we saw last week, because that's going to play in with what's happening here in the precious metals going forward. So let's look at it. Before we get to that, I've had a number of people send me messages and wonder about the pack, the two dogs that I have here, and I wanted to say thank you for asking, and if you're not interested, you can fast forward by 45 seconds or something. But I just wanted to let you know they're both doing well, and this is Klaus. He is doing excellent. He's 2.5 now, and you know, it's funny because for people that don't know him, he looks like such a ferocious beast. And if you're not a dog person and you see a 90-pound male German Shepherd like this who likes to gnaw on big logs and carry them around and stuff, this can look like a scary guy. But when you start to get to know him and you realize that what he actually just wants to do all the time is play, it's actually it's quite funny to see how people begin to realize that in time. So anyway, this picture was from last Christmas, and the other one was from a couple weeks ago. But Klaus is doing well, so thanks for asking about him. And the other dog, Schooner, here he is. This was from a couple months ago, I think in March, the last time it snowed. And Schooner has been quite sick, I will tell you. So for people who are wondering, he's been quite sick. But we have given him quite a regimen of various medicines, and he is doing significantly better. Significantly better. He's made a miraculous recovery, actually, and I just couldn't be happier with the fact that he's still with us, and all of his signs look really well right now. So, again, this is a recent picture. Thank you for everyone who's asking about them, and we'll do a couple videos going forward. I'm going to be spending some time up in the woods over the rest of the summer, and we'll do some videos talking about the markets, talking about the philosophy of investing and various aspects of human nature, of which the markets are a part. As you know, those are topics that I love to get into as well. So thank you. Let's take a look at here what happened on the night of the silver flash crash. Here is the 1.5-year chart of silver. But before we turn to that, I want to pull up, this was the chart from silver. The blue line that we're looking for here was last Thursday. The red line was last Friday into Sunday night in Asia here in the green. So I want to tell you what I noticed from this data point here, and that's what this is. This is a data point. So, first of all, flash crash. Was this manipulation? Yes, of course it was. Someone chose a relatively low volume trading period to dump a ton of silver onto the market and distort what would have been some more regular trading like this, and so it happened. But my philosophy is that, first of all, manipulation happens in all markets. I mean, the very fact that the Federal Reserve controls the currency is manipulation. The very fact that, you know, certain companies receive bailouts and certain companies receive government subsidies, that's manipulation. So every market throughout time has been manipulated, not the least of which is precious metals. So if you're going to be a precious metals investor, you have to build the knowledge of manipulation into your game plan. You can't be investing expecting that everything is going to just, you know, be completely free market. No market is completely free market. So that said, what happened here is someone dumped a ton of paper silver on the market and triggered a number of stops. So futures traders are highly leveraged. They're usually putting down anywhere between 1 and 5% of the total capital that's required for their paper positions. So as soon as the market turns against them, they have stops in the market and they are forced to sell. So sellers sell, and then more sellers sell, and more sellers, and selling begets selling. It creates this waterfall effect as stops are taken out. Now, the thing is that a lot of people lost a lot of money here on this crash. We actually were holding some put options from a number of weeks ago, and we actually made quite a bit of money on that crash. So, I just want to say you can build that knowledge of when these things are likely to happen into your game plan and at least profit or at least protect yourself from that somewhat. Looking at here, now what caused the reversal here? This is the big data point. Think about this for a second. And the Kitco chart is showing 1470, let's call it. We'll look at some other data which actually shows the low point as being quite a bit lower than that. But whatever that point is, somewhere here in the mid-14s, think about what happened. Someone stepped into this market here in the 14s who was not using a whole lot of leverage. So someone came into the market that was buying and willing to hold those buys no matter what. That's what causes these bottoms on a spike low. It's like all these future traders are panicking, and then someone steps in and says, I'm buying and I'm standing by those purchases. So this data point is going to be very important for the rest of the year as far as silver is concerned. And let's move that out of the way. Now, when we look at the 1.5 year timeline here for silver, and we can see here that the spike low, according to this data source, looking at the continuous contract here, this data source is showing it as 1420. So I would like to be conservative and say 1420, use the lower figure. Now, what I can tell you from my study of the markets here is that when we see these flash crashes after a sustained trend, right? You had a 4-month downtrend already, and then a flash crash, which is different from had the price been rising and then there was a flash crash. When you see what had been a downward moving market and a flash crash, the market will almost always have to retest this level or the vicinity of the level, or even nominally lower. So for example, it could be down to the low 14s or the upper 13s to retest this area here of the flash crash. And there are people who are saying, well, this flash crash marked the absolute bottom and now silver is off to the moon. I strongly disagree. I do not think silver is off to the moon at this point, but very important, I think this data here marks an important level that will mark the bottoming process for this decline. So here's what I expect. Something like this is a hypothetical in the green shading here. I expect silver to carve out something of a retest in this vicinity, and then we will see something of a significant low forming 2 years after the late 2015 low here. So that's what I'm going to be looking at. Anything higher than this level, or including even a retest of this level, will mark a market that is basing over the long run, which is a very bullish sign for long-term position accumulation into these lows. So let's watch this very carefully. From a short-term basis, this was an important support very clearly here between $15.75 and $16. Look at how important this was. So this level was hit here back in February of 2016, failed. Hit in March of 2016, failed. Overcame that. It acted as support in June. It acted as support back around the new year. It acted as support again in May, and now it has failed. So this year, almost year and 3 months here, has broken. This is not going to be recovered on an instant basis. We can see when we look at these types of spikes, the inverse spikes here, this is the one that happened after the Brexit vote, and you can see when you have an established trend and you have a final spike like this on a very high volume, even though this may mark, in this case, for example, on the Brexit spike 21.25, this did mark the high for the move. The price of silver did not reverse immediately. It came back down and then it retested the $21 region, came back down, retested it again before continuing to reverse. So what I'm saying is here, I expect the same price action to happen in silver here over the next several months. Basically, the vicinity of this low will likely mark the low plus or minus a few cents here on each side, but it's not going to reverse immediately. There's going to be some grinding and retesting that happens in this area, and I think that is going to correspond with a general deterioration in sentiment in this sector, such that very few participants remain when the bottom forms and silver starts its next advance of similar magnitude to the 2016 advance. That's how markets need to form these long-term bottoms. They need to take as few people with them as possible. So pay attention to the bottoming process that is happening in here over the next couple of months. As we look at the short-term price action, again, sort of a rejection right around the $16 mark. I don't see silver moving much higher than that over the short run. Sometimes I like to just look at, we'll close with this today, I like to look at just a brief side-by-side comparison of the three major markets that we all follow here, and I'm sure that most people out there are interested in if you're watching this. And what we were talking about here, very clearly plotted, one on top of the other, the gold miners, the HUI gold miners index, silver in the middle, and gold on the bottom. And we're looking at that from the 2015 lows. And so what you can see when we look at this linear trendline analysis, you can see the gold miners here have broken this linear trendline. They attempted to recover it back here in the middle of June and have now begun to move lower. It looks like there's a second attempt happening now. I do not believe the miners will recover this level over the short run. That said, I think the miners may actually outperform on whatever decline remains here in the metals themselves. Looking at silver, you could see has broken this same trend line right here after a first false break, a legitimate break. The retest failed right here just a week and a half ago, and then boom, this massive drop lower basically after this linear trend line was properly negated. So anyone telling you, don't pay strict attention to these linear trend lines, even if you have a fake out once in a while, when you're able to capture a move like this with futures or options, this can really make your week or your month, because these moves are not that often when they happen. These are fairly rare, these strong moves like that in one direction, and linear trend lines can help you to see when these moves are setting up. When we look at the relative performance in gold here, we can see gold has not yet tested this trend line. So what I'm saying here is that if the gold miners and silver have broken this same linear trend line drawn from the 2015 lows, is gold next? Well, I expect gold will at least test this trend line right here around 1170. That is my expectation for the next 1 to 3 weeks. And I would not be surprised if gold shows leadership and actually holds this trend line even as the other part of the complex has negated it. if that happens, we will evaluate that at the time. I cannot predict that yet. I just say gold is targeting 1170, and let's see what happens then. It's going to give us a very strong signal as to whether or not gold is just in the leadership position at this point, in which case we're in the very early stages of a bull market. If gold fails here, it is telling me that we are actually preparing for a move below the 2015 bottom. So yes, if-then statements, just like everything else in life. Thank you very much for watching. My premium subscribers will be getting the signals from me first when we see these bottoms form, and or when we see the breakdowns, as well as the exact trading signals that I'm using here. That research comes out weekly with flash updates in between. You can find information on that on the MADE website. And if you would like to speak on your situation from an independent perspective, know that I do not sell gold and silver. I do not sell the mining companies either. I simply am looking to profit from these markets, and I share the research that I believe will allow us to profit over the sum of our trades going forward. So if you would like to discuss anything about your current situation in the precious metals, I have found that mainstream investment advisors know very little about gold whatsoever, and so this service is an attempt to provide some level of reasoned research into the possibilities that could be coming here for gold and silver investors. Thank you very much for tuning in. Have a lovely day today on Thursday, and I will see you this time next week.